April's definitely been the most volatile month of 2025. It really started with the Liberation Day tariff package that was announced on April 2nd. That was a surprise because of the excessive rates. Things calmed down after a 90-day pause was announced on April 9th, except for China, where that tariff war really escalated and has basically created an effective trade embargo between the two countries. Canada's going to continue to be impacted in certain sectors such as automotive, steel, and aluminum. The good news is there's an exemption for USMCA-compliant products, which effectively gives a lot of products tax-free status as they cross the border. The U.S. economy contracted 0.3% in Q1. This was the first contraction we've seen in 3 years, but was in large part due to the rush of imports into the United States as companies tried to get products across the border before the implementation of tariffs. We're a long way still from calling this a recession, which we would have to see much broader slowdown, also affecting things like employment. The Canadian economy is probably going to grow by about 1.5% in Q1. Part of this is going to be the benefit of exports as American companies are rushing to import goods ahead of tariff implementation. Q2, we're probably going to see a slowdown. Really, we're going to see a stall in the economy. A lot of the growth beyond that point is going to be dependent on what happens in the tariff negotiations. Investors should remember that the stock market is not the economy, and the economy is not the stock market. Stock markets anticipate things that are going to happen in the economy. So as we see these negative impacts on the economy unfold over the coming weeks, months, and quarters, these have largely been anticipated by the stock market, and the stock market is actually looking for the recovery in 2025 to 2026. So investors should stay the course, maintain a well-diversified portfolio, and ensure they speak to their financial advisor.